G'day folks, welcome back to another update for the S&P 500 and the NASDAQ. Now it's still in a bit of a downtrend most likely. We've had a bit of a slight pullback to the upside in the last day or two, but overall medium to longer term it looks like it's continuing on a downtrend. Before we get into the charts, make sure you hit that like and subscribe button to support the channel. First we'll look at a bit of an outlook for the S&P and the NASDAQ. Recent performance, both indices have experienced 2 consecutive years over the 20% growth, marking the most significant 2-year percentage increase since 1998. Valuation concerns, the S&P 500 is trading approximately 24.8 times expected earnings over the next 12 months, surpassing its long-term average of 15.8, indicating potential overvaluation. A concentration in technology, the Magnificent 7 tech stocks now constitute about 35% of the S&P 500, raising concerns about market concentration and parallels to the dot-com bubble. The NASDAQ tech focus. The NASDAQ composite remains heavily weighted towards technology and biotech sectors, contributing to its higher volatility and compared to the S&P. And historical returns, historically the S&P 500 has delivered an average annual return of over 10% since 1957, offering substantial gains for long-term investors. So we always start with the long-term trends, so we look at the monthly, the weekly and the daily. And for those new to the channel, we've got these moving averages on the price and also these moving averages on the CCI 150. And to learn how to draw those, there's a video in the description below if you want to reference that after this video. But basically, looking at the look at the monthly first off, you can see here since around about May 2023, the S&P, sorry, this is the NASDAQ. The NASDAQ has been doing quite nicely with the CCI above its moving averages, and likewise the price. So it's a nice big bull run. But notice we've got lower highs on the CCI versus higher highs on the price. Now there's nothing really significant yet in terms of a pullback, but we most likely see possibly in the next few weeks or even months, this could keep rising, and as long as this CCI keeps dropping, we're going to consider that a bearish divergence. So at the moment, early days yet on the monthly, so just be aware of that as we move forward. On the weekly, you'll see here we had another bearish divergence, and these are independent from each time frame, so they're not necessarily aligned. Lower highs on the CCI versus higher highs on the price, and I've drawn a Fibonacci here to the recent low before that divergence started, and the minimum retrace we can expect is to that 23-38% level, and you can see it's already hit that. But notice the CCI is still dropping. This is the weekly, it's still dropping, so we might see further declines. If this CCI breaks higher than that a very narrow moving average band, if it moves higher than that band, and then we expect the price to also rise as well. And by that stage, we may see a continuation of an upswing. But at the moment, it's bearish momentum on the weekly. On the daily, we had another bearish divergence here between that high and that high. Lower highs on the CCI versus higher highs on the price. And that's also hit our minimum 23-38% range. And more than 90% of the time, it hits this minimum range. Now, it could obviously fall a lot lower than this. The CCI is still dropping and still declining, so just be aware of that. It's actually hit this descending diagonal trend line as a potential resistance. Now, if it breaks higher than that, then the next level of resistance will be this hard resistance up here at 22,135. So we always trade in the direction of the higher time frame. So if we go to the intraday charts, so this is the 1 hour, we've got here the daily as a reference. So we only take short trades, we don't take long trades. So you only would have taken short trades. So the latest short trade you would have taken is when the CCI breaks below the moving average on that point there. And that also aligns with that break below the moving average of the price chart. So you would have taken a short entry there, and you close it out when that CCI breaks into that moving average range there. So theoretically, you probably get ready to close it out any hour now, and that's giving you a 0.5% gain in 11 hours of trade. You would not have traded this long position. Even remember, we're trading in the direction of the higher time frame, the daily. That would have been a small trade, and that would have been a so if let's zoom in on this one. So that broke below the CCI there on that candle, and it broke into that moving average range. That would have been potentially the first stop loss you would have encountered, or if you held on to it, if it broke into that area there, that would have been another area. So that would have been a loss in that little trade. Another entry you could have made would have been here as a short entry on that candle, and you would have closed it out when that CCI broke into the moving average range on the close of that bullish candle there. So that would have been a 0.4% gain in 4 hours of trade. Re-enter it again when the CCI breaks below the moving average there, and that would have been that candle there, and you would have closed it out at the bottom of that candle because the CCI broke into that moving average range, and that was a 0.4% gain in 4 hours of trade. Enter again. Let me get rid of that. So you enter another trade when it enters, close of that candle there, and you would have closed it out on the close of that candle. That was a 0.5% gain in 10 hours of trade. That's basically how you trade in the direction of the higher time frame. There are a few stop losses here, as you can see there, but generally when you get in on a good trade, like that would have been another good trade to take as well, that would have closed out on the bottom there near, so that would have been close to about a 1.5% gain in 10 hours of trade. So the S&P has got a similar sort of pattern on the monthly, the weekly and the daily. So first off, on the monthly, we've got a bearish divergence on the CCI versus higher highs on the price. On this one, I've already drawn the Fibonacci range, and that's our minimum target range there. So that's probably a bit too early to anticipate. And I don't trade these divergences. I'm not telling you to go short. I'm just telling you this is a potential area. So if you're going long, just be cautious that you may want to take some profits, especially if this starts declining towards this moving average range. But at the moment, bullish, or I would call that a neutral positioning on the monthly. Let me just get rid of that Fibonacci to make it a bit cleaner. That's on the monthly. On the weekly, likewise, another bearish divergence. The CCI is still below its moving averages, and that's already hit its range. So this could actually bounce out of that, and it's already done that this week. And we might see further upside. But again, if this breaks higher than that moving average on the CCI, then we expect it to rise even further on the price. And that's already executed its bearish divergence. So that's the weekly. And as you can see here, I've drawn these other little rectangles where these previous divergences have occurred. Back there, you see there. And on the daily, likewise, that's also broken below the 23-38% level. And this has gone down as far as the 61% Fibonacci retracement, just below it. And it's bouncing out of that. And this one's actually also hitting this diagonal descending trend line. You'll notice the CCI is broken above very cautiously, but notice it's flattening out and declining slightly. So we might actually see this break further to the downside. So just be cautious of this one. If that breaks and starts heading higher on the CCI and it breaks through this diagonal descending trend line, then it's probably more upside to go, and that the next level of resistance will be this 6100. But at the moment, caution, we might see it starting to pull back from the daily. So if we go to the intraday charts, the 1 hour charts, and you can interchange these with your own time frame, 4 hours, 2 hours, etc. We only take direction of the higher time frame. So here you would have gone long on that one when the CCI broke above the moving average, and you would have gone long there when it broke above moving average of the price, but also the CCI. Wait for it to break above on the price. Don't just go long when you see this sort of action on the CCI. So again, you would have taken a long entry there and close it out when that CCI breaks into that moving average range. So that was near the top there. That would have been a 1.75% gain on the hourly in 16 hours of trade. That would have been a false break, and you would have been stopped out on that one. And avoid taking short positions on this because we're still going long on the daily. As soon as that starts turning bearish on the daily, and that's bearish, we start taking short positions. So you can see here, back here again, during this bearish period, you would have taken these short trades and close it out, for example, between those periods and that would have been a nice gain there. That would have been a nice entry there, close it out. That might have been a break even or a stop loss there. A couple of these would have been stop loss or break evens. And then the next one, significant growth, would have been this one when it broke into that moving average down there. When it broke into that one there, that was a 1.06% gain in 16 hours of trade. So that's how you trade based on the direction of the higher time frame. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.